This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Nasdaq 7,000, the index that fueled the rally in 2017, closes above a key psychological level for the first time ever.
New year, new laws. Some are quirky, but a number of them could impact business and your money.
Shifting gears, why the American-made small car is slowly fading away. Those stories and more tonight on Nightly Business Report for Tuesday, January 2nd.
Good evening, everyone, and welcome. Investors are ringing in the new year with new records. On the first day of trading in 2018, the Nasdaq closed above 7,000 for the first time. The S&P 500 reached a fresh all-time high. And today's action was led by a rally in technology stocks, the same sector that was the big winner last year. Today, the blue chip Dow index added 104 points to 24,824. The Nasdaq advanced 103, and the S&P rose 22 points to a record. And after today's gains, investors are paying close attention to a number of key psychological levels for the major indexes. Bob Pisani is at the New York Stock Exchange.
Another big day for the markets. There's a lot of big round numbers in some of the major indices coming up. What's it all mean? Not much from a technical perspective, but they are attractive targets for traders to use as a sign of the market's advance. So round number one, Dow 25,000, only about 200 points away, less than 1%. If you think we seem to hit this big round number in the Dow every few months, you're right. We had 20,000 on January 17th of last year, 21,000 in March, 22,000 in August, 23,000 in October, 24,000 in November. But even the skeptics agree that Dow 25,000 would be a big round number. Round number two, Nasdaq 7,000. Now, you know it's dominated by the FANG names, Facebook, Amazon, Apple, Netflix, Google, parent Alphabet, as well as semiconductors. But smaller tech companies like Seagate, and even a smattering of industrial names like Tractor Supply, and even retailers like Ross Stores and Costco have been strong recently. A lot of things contributing. Round number three, S&P 3,000. This is the big one. We're still a couple hundred points away, but many analysts had that big round number for an overall target for 2018, which would be a move up of about 8%. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
New year, new records. So what is next? Brian Levin is senior investment strategist at Oppenheimer Funds, and he joins us to share his thoughts. Brian, Happy New Year. Welcome. Good to have you with us.
Thank you. Happy New Year.
We get off on a nice footing here today at the very least. Give us your sort of overall view of the global economic landscape in which investors will have to put their money to work this year.
It's a nice backdrop for investors. If you look around the world, most of the major economies are growing above trend, and that's something different than what we saw in years like 2013, 2014, 2015. So that's a good sign. You also have inflation generally low across most of the world and even coming down in the emerging markets. So you have policymakers which continue to provide support to this ongoing global expansion.
What about the tax reform that we've seen passed? A lot of people think longer term it will provide some strong economic growth. Other people do not think it will. Where do you come down on that debate and its impact on the market?
Well, at the very least, it provides a boon to corporate earnings. And you've seen that recently with some improvements in financial stocks, consumer discretionary names. Those are the sectors that are among the biggest beneficiaries. Now, the question is, at this point in the cycle, can we see the United States move up to a new, higher, sustained level of growth? I am skeptical. Now, what that means for investors, what you saw today was investors favoring growth stocks, much as they favored growth stocks in 2017. If we're to move to a new, higher, sustained level of growth, you would want to value the more value-oriented parts of the market, things like financials, perhaps energy companies. So I would continue to focus on growth wherever we can find it in what's likely to still be a slow growth world. The other side, there are investors saying this is the beginning of the value rally. Again, I'm skeptical.
Slow growth and low inflation generally is a pretty nice recipe for equities across the board. But what really matters here, Brian, it seems to me, is the level of corporate profit growth, which could be a lot greater, mightn't it, than the level of economic growth. What do you see for corporate profits this year in the U.S. particularly?
Well, corporate profitability is going to be quite sound, and there's going to be a lot of parts of the market, a lot of companies that are growing significantly faster than broad GDP. And those are the companies that are going to be the beneficiaries. Those were the companies that were the beneficiaries in 2017. So the backdrop for U.S. companies, the backdrop for global companies is quite good. Investors have been fighting this bull market. It's a long secular bull market almost every step along the way. In our minds, this cycle's not going to end anytime soon. It's a good backdrop for companies. Investors should be participating. Do interest rates matter? Does the Fed matter to this market? Absolutely. And, you know, in this still relatively slow growth world, the Federal Reserve does have to proceed with some caution. We have seen the yield curve flatten in 2017 as expectations of Fed interest rate hikes in 2018 came on board, and the 10-year Treasury rate did not move up significantly. So if the Fed's going to continue to raise interest rates, you would need to see long rates back up amid expectations of higher real economic activity or inflation. Without that, the Fed's going to have to be cautious. So I don't expect long rates to go up significantly. I think you might see some inflation, but the Fed is going to have to proceed with caution. If the Fed gets too tight, they may curtail this cycle.
All right, Brian, thank you very much for your help tonight. Brian Levin with Oppenheimer Funds.
A number of geopolitical events are also rumbling beneath the market's surface. There is the threat from North Korea, and there's Iran, where tensions are rising, protests are spreading, and the death toll is growing. Violent demonstrations have erupted against the country's leadership. U.S. Ambassador to the United Nations, Nikki Haley, said the UN cannot remain silent and must speak on the issue. She is calling for an emergency session in the coming days. And as Michelle Caruso-Cabrera reports, at the center of it all is the Iranian economy.
The ongoing protests in Iran are the most violent since 2009, when students rose up in response to what they believed was a rigged election. Political observers say the current uprising, which started last Thursday, is significantly different.
This one is more broad-based. It's occurring in many, many more cities. Previously really centered in Tehran, more youth intellectual movement. This one is almost populism on the move. There's real dissatisfaction in the Iranian population with the lack of growth in the economy, which they were promised.
Initial reports last week said protesters were angry about a sharp rise in the price of food. Inflation, currently around 12%, is a long-running problem. It reached as high as 32% back in 2013. Unemployment also a problem in Iran, 12.4%. According to Iran's statistical office, for men, it's only 10.7%, but for women, almost 21%. Youth unemployment, even worse, 29%. For young men, 25%. For young women, 44%. The economy did improve after some sanctions were removed by the Obama administration as part of the nuclear deal. It allowed Iran to sell oil again, and according to the IMF, GDP growth from 2016 to 2017 was nearly 7.5%. However, growth in the non-oil sector was less than 1%. There is still extensive government intervention into the economy in terms of price controls and subsidies, and the Revolutionary Guard control large swaths of the economy. Experts are divided on whether or not these protests are going to lead to regime change.
The Supreme Leader Ali Khamenei can and will use ruthless force to put them down if he has to, and that could be around the corner.
But the death of so many protesters could have a ripple effect.
Once we start having funerals, we could get into a 40-day cycle of mourning and protests, which is ultimately what brought the regime down in 1979.
How the government reacts could determine whether these protests escalate or fizzle out. For Nightly Business Report, Michelle Caruso-Cabrera.
Iran could potentially be a wild card for the price of oil this year because the country is, after all, OPEC's third biggest oil producer. Uncertainty surrounding output from that country caused prices to rise earlier today, but then those gains fizzled away. Domestic crude finished the session down slightly to about $60 a barrel.
Meantime, natural gas prices were pushed higher, now up 15% over the past week, thanks to temperatures that are well below normal across large parts of the country. Along with a cold snap came increased demand for heating oil. According to data from Point Logic Energy, the U.S. burned the most natural gas ever yesterday, breaking a record set during the so-called polar vortex in 2014. The deep freeze also lifted shares of the auto parts retailers because cold weather can weaken batteries and thicken engine oil, leading to greater wear and tear.
The commodity sector in 2017 was helped by a pickup in economic growth across the globe. So what's in store for some key commodities this year? Jackie DeAngelis takes a look.
Commodity price fluctuations continued to surprise investors this year. Gold lost some of its luster. Oil never rebalanced, and gasoline prices remained relatively high, even with more supply coming online. Here's what to expect in 2018. Gold prices stall. In 2017, gold lost its safe haven status as stocks rallied. The precious metal traded more on Fed-related moves and will continue to do so next year. With the expectation of rate hikes on the horizon, expect gold to continue to stall in 2018. Oil is range-bound. Crude moved from the low 40s to around $60 a barrel this year. Oversupply pushed prices lower. OPEC moved prices higher. That push and pull will continue next year. Shale producers will pump, OPEC will hold its cut, but those two opposing forces will jostle the market. Gasoline prices remain high. Gas prices always rise faster than they fall. Even if crude prices stay in the $40 to $60 range, the average price for a gallon of regular gasoline won't fall under $2. For that to happen, crude would have to see its 2016 low of near $25 a barrel, and that's not in the cards. For Nightly Business Report, I'm Jackie DeAngelis.
So, as Jackie detailed, commodity markets ended 2017 on a high note, but will that momentum carry over into this year? Here to talk about that is John Kilduff, again, Capital founding partner. Good to see you again, John. Welcome back. Happy New Year.
Happy New Year to you, too.
What's it going to look like for the energy sector this year?
Well, I think there's maybe a general theme in commodities, so particularly in the price action that we saw towards the end of the year as the tax reform package crystallized, as some of the measures that many companies are taking in terms of higher wages, special bonuses, investments in different things. I think the prospect for inflation generally may be greatly underestimated at this point. I think that's why you're seeing gold potentially now break out to its recent high near $13.50 an ounce. And part of the inflation will be for a good reason. It's because there is so much economic growth and activity going on around the world. Manufacturing PMIs are through the roof, for example. This is a survey of factories and how much they're operating, what their order flow is looking like. So there's a chase on for goods and services around the globe for everything, all kinds of stuff. And so that is pushing prices
So that
higher.
helps commodities and separating from oil and gas, which we'll talk more about, I'm sure. But if you look at some of the industrial commodities, lumber, copper, things that are used in building trades around the world, I would think if there's a drive to inflation and strong demand, that's going to push up the prices.
And I think you're seeing it first here in the commodity sector. I know we're not seeing it in terms of wage inflation yet in other areas that most of the economists focus on. But for us commodity folks, you know, we're a little simpler. We see the stuff being drawn down in terms of inventories.
That's a technical term,
That's
right, John?
That's
what
right.
you guys
It's the commodity view of this thing.
What role is China going to play this year in either the boom in commodities or, you know, when China slows down, a lot of times we see pressure in commodity markets?
That's right. And they're going to continue to play a big one. And also, too, is they can remain active in trying to support and further their economy, but they do sort of lurching or halting things, if you will. For example, in their effort now to fight their inflation, their pollution problem, they've cut back drastically on their own mining of things like copper and other production of other heavy metals or things like cement. So they've gone to the...
They have to get it somewhere else.
They're importing a lot more of it. So they're making less themselves, importing more from abroad.
When is it going to get warmer, John? I'm worried about my heating bill. Oil or natural gas, as we said, highest demand ever yesterday for natural gas. A lot of people watching that Rose Bowl game at home, I guess. Do you see prices sustaining for the next few months in natural gas and oil?
Yeah, well, natural gas, first of all, it's going to be glacial in the Northeast come Saturday.
Yeah.
You mentioned the report about us burning a record amount of natural gas yesterday. I would imagine that record will be broken on Saturday, except for the fact that it's a weekend, there's less industry involved. But what we're seeing is that the shift away from coal over the past several years to natural gas sees us burning a lot more of it whenever there's heat or cold. And that's what we're seeing right now. I think the price of natural gas, which was just at $2.56 a unit at the low point 2 weeks ago, will be north of 4 potentially by the end of January. We're going to pull out about a quarter of our natural gas supplies just over the course of January if things keep up.
So get ready for higher bills.
Right.
Get ready for higher bills. There's a little bit of a buffer and a time lag because the utilities have to take it in, process it, and then hit you with a rate increase down the road. But yeah, get ready for higher prices. The one downward pressure, though, Tyler, I'll tell you, still remains potentially is for oil, because as much as there is demand there for it and refined products, there is a ton of supply. You don't have that with the other commodities.
All right.
True. John, thank you.
Thank you.
John Kilduff.
Appreciate
Thanks for the bad news, John.
Yeah.
I'm here for you. Here for you every time, Tyler.
All right, still ahead, lawmakers have a long to-do list and not a lot of time. Republican Senator Orrin Hatch plans to retire. Hatch is the longest-serving GOP senator and the head of the Finance Committee, which, of course, played a key role in writing the tax bill that passed last year. The 83-year-old will retire at the end of the year, bringing a decades-long congressional career to an end, and it could potentially pave the way for Mitt Romney to run for the seat. Romney has not made any definitive statement about his plan.
Well, it may be a new year, but when lawmakers return to Capitol Hill tomorrow, they'll start tackling a familiar issue, the budget. Late last year, Congress approved a measure to fund the government, but just through January 19th. And a number of thorny issues will likely be linked to this battle. John Harwood is following the story for us tonight from Washington. Good to see you, John. Happy New Year.
Happy New Year.
Let's start with the budget battle. What are you expecting, and how contentious or difficult could things really get?
Well, Sue, I think the watchword for 2018 is going to be low expectations from Congress. I do not think we will have a government shutdown. I think Republicans and Democrats will get together on a deal that raises the current spending caps for defense spending and correspondingly raises them for domestic programs as well. That's a way to bring the two parties together. But that also, because it will result in a higher deficit, is going to ensure that it is more difficult to get things like infrastructure, which the president and GOP leaders have hoped to have some action on because there isn't going to be as much money lying around.
Immigration is also a contentious issue. What can we expect there and on the program known as DACA, Deferred Action for Childhood Arrivals?
Well, that's going to be difficult to move, although there are the outlines of a deal if Republicans choose to make it. Democrats are insisting on some progress or resolution for those DACA, those Dreamer recipients, in return for their votes to keep the government open. And they think because of the importance of Latino voters, they're going to have leverage to get what they want there. The challenge for Republicans is that their base, the most conservative part of their party, is very opposed to a deal on DACA, and there's the potential that members of Congress who vote in favor of such a deal might find primary opposition from fellow Republicans. So I would marginally expect that they will have some resolution of the DACA issue. The president has said he wants one. It's not going to be easy to achieve. That's likely to be the most difficult part of this budget fight.
John, as always, thank you. John Harwood for us in Washington tonight.
Amazon and Salesforce reportedly look to move away from Oracle, and that is where we begin tonight's market focus. According to the news site The Information, both tech giants are making significant progress towards replacing Oracle's database software. And if Amazon and Salesforce, which are two of Oracle's biggest customers, succeed in finding lower-cost alternatives, it could be proof that other big businesses can do the same. Shares of Oracle off more than 1% at 46.63. The oil giant BP said new tax policy will shave off $1.5 billion from its fourth quarter earnings. Despite the hit, the company said it expects the new lower corporate tax rate that takes effect this year will have a positive impact on its full year results. BP shares were up a fraction to $42.38. And Weight Watchers has signed the music producer DJ Khaled as a social media ambassador. The company said Khaled will share his own weight loss journey using a new Weight Watchers program with his millions of followers on Snapchat, Twitter, Instagram, and Facebook. I won't be watching on any of them. The program launched last month with a campaign featuring Oprah Winfrey, who is a part owner of the company. Weight Watchers stock rose 8% to $47.83.
Sears is reportedly pulling back from traditional TV advertising. The Wall Street Journal said the struggling retailer hasn't run a single TV ad since November, despite it being the crucial holiday shopping season. The company, which has been slashing costs and closing stores, spent about $15 million on national TV ads last year. Shares of Sears climbed 5% to $3.78. Rent-A-Center said its CEO, Mark Spiess, has resigned. Spiess will be replaced by the company's former president, Mitchell Fadel. The rent-to-own furniture retailer has been under pressure from two activist hedge funds to sell itself. Shares of Rent-A-Center closed down more than 5% to $10.48.
The calendar says it's 2018. You can't deny it, and that means there are a number of new laws across the country that took effect with the ringing in of the new year. Kate Rogers reports.
It's a new year, which means new laws are kicking in across the country. Some are common sense, while others are unexpected. In California, marijuana becomes legal for recreational use, and that means drivers and passengers will not be able to ingest while on the road, just like with alcohol. Wages have also been hiked in 18 states and 20 municipalities nationwide, so minimum wage workers are ringing in the new year with raises. In Illinois, the well-being of pets will now be considered in divorce cases. The court can allocate joint or sole ownership of pets in part based on their welfare. Service animals are exempt. Sticking with the Prairie State, schools can't expel kids who are in pre-K anymore. They have to be documented for difficult behavior and can be transferred to other programs if they are difficult, but parental permission is needed. In Pennsylvania, a permit for using consumer fireworks is being removed, but many don't bother getting those permits to begin with. In Tennessee, barbers can now make house calls. Previously, this was only an option if the client were ill. The barber does need to have a residential barber certificate in order to operate via home visit. And good news for people who like to get wild on social media. Vermont will now prohibit employers from requiring or requesting that employees or applicants disclose personal social media account info or access their accounts in front of employers. For Nightly Business Report, I'm Kate Rogers.
Coming up, shifting gears, are we witnessing the demise of American small car production?
Billionaire investor Peter Thiel reportedly making a big investment in Bitcoin. Thiel is one of the really bold-faced names in Silicon Valley. And according to the Wall Street Journal, the venture capital fund he co-founded has amassed hundreds of millions of dollars of Bitcoin. Thiel is well known for being an early investor in Facebook.
Amazon shipped more than 5 billion items worldwide with its Prime membership last year. That's the first time the company has released that information. Amazon still won't officially say how many consumers across the globe participate in its Amazon Prime membership program.
2017 marked the safest year in commercial aviation history. According to a Dutch consulting firm, airlines recorded 0 accident deaths in commercial passenger jets last year. That data exclude cargo flights, military transports, and accidents caused by international acts. The average number of airliner accidents and fatalities has been falling for the past 2 decades.
Almost a year after Donald Trump became president, promising to bring auto production back to the U.S., the industry is in transition. Several automakers have announced plans to expand production in the U.S., but in almost every case, they are building more trucks and SUVs. In comparison, fewer cars, especially small ones, are rolling off American assembly lines. Phil LeBeau has our story.
These are good times for American auto workers. Profits are strong, wages are rising, and almost every plant is running at close to capacity. But look closer at what they're building, and you'll see the American-made small car or sedan is slowly fading away. Through November of last year, cars made in the U.S. by the Big Three were down at least 14%, with the biggest drop coming from Fiat Chrysler, which said it will stop building cars in the U.S. and instead expand production of more profitable trucks and SUVs.
FCA is an interesting example, but they're a little bit different than most of the industry. When they initially announced canceling small and mid-sized sedan production, the plan always was to replace those vehicles with other vehicles, and then it just never happened.
What changed? Just 5 years ago, Fiat Chrysler made a big deal about adding jobs to build the Dodge Dart at its plant near Rockford, Illinois. Since then, the combination of relatively cheap gas and a greater selection of more fuel-efficient crossovers and SUVs has convinced a growing number of Americans to ditch their cars and pay a little more for something bigger.
The gap between a small and mid-sized sedan in terms of fuel economy to those larger vehicles is smaller than ever, and consumers are jumping on that.
In fact, sales of SUVs and crossovers were up more than 6% last year, while overall auto sales declined. There are still some U.S. assembly lines cranking out small cars, and Toyota plans to add a new plant to build the Corolla here in the U.S. But overall, you can expect auto workers to continue building more trucks and SUVs. Critics worry that the industry could be setting itself up for problems if there's a sudden spike in gas prices. But for now, prices at the pump remain relatively low, as does demand for small cars and sedans. Phil LeBeau, Nightly Business Report, Chicago.
Before we go, here's another look at how stocks performed on this first trading day in the new year. The Dow added 104 points. Nasdaq advanced 103, closing above 7,000 for the first time. And the S&P 500 rose 22 to another fresh record.
Quite a day. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Mathisen. Have a great evening, everybody, and we will see you right back here on January 3rd.